The altcoin market has been quite mixed in the last month. Some things are red, some things are green, and hidden in all of this is the Pengu token. Pudgy penguins lost 25% in the last month. The question is, can this turn around now? Let's have a look at the on-chain data, the data most people are not considering. This is not the first video on Pudgy penguins on this channel. I publish videos regularly, so feel free to subscribe over here to not miss anything in the future. Now, the Pengu token has seen a true roller coaster ride. After launch, we saw a massive dump, subsequently the recovery. The question is, can we potentially rise further, or are we going to dump back to the old lows? A lot of investors got shaken out at the beginning of this year. Pengu went down by more than 90%. But then the few contrarians that were brave enough that bought the bottom, they got an outperformance of more than 700%. The ultimate question is always, is the risk worth it? When we buy a meme coin, it's always about the potential upside versus the potential downside. Now, meme coins are very risky. They can drop 90%, but is the potential upside worth that risk? Now, here's an overview of meme coins on the Solana chain. And the very largest of those meme coins is Pudgy Penguins with a market cap of 1.9 billion. Pengu is larger than the Trump token. It's larger than Bonk as well. The problem is there seems to be some kind of a glass ceiling for the larger meme coins. Have a look at this. All of them went down recently. But once we go lower on that list, once we look at the smaller altcoins, suddenly we do see a few winners here and there. Troll being the best performer. By the way, we covered Troll very early on this channel when the price was still at 3 cents. Things seem to be moving in cycles, as in a meme coin tends to gain traction, it tends to gain momentum and a lot of attention. And then at some point there's a saturation point where it's very hard to grow beyond that point. And then the larger the meme coin gets, the more likely it is to go down. Let's compare the maximum market caps of a few meme coins on Solana. So Pudgy Penguins once peaked out at 2.7 billion. Now again, it peaked out at very similar levels. It's currently at 1.9 billion. Have a look at Bonk. Bonk peaked out at 4 billion. Here is Dog with Head. That peaked at 4.6 billion. Here's Fartcoin with a peak at 2.1 billion. Here's Popcat, again 2 billion. Cat in a Dog's World. Here the peak was at 1.1 billion. Peanut the Squirrel had its peak at 1.8 billion. Over here, we've got Gozeus Maximus, 1.2 billion. And over here, we've got Frog with 700 million. So there seems to be some kind of commonality here. It's incredibly hard for a meme coin on Solana to go beyond the 4 billion mark. Most meme coins turn around already at 2 billion. Some even don't make it to 2 billion. But this seems to be where the air is getting thin, at around 4 billion. We have not seen a meme coin on Solana with 10 billion or with 20 billion. So this gives us an idea what the potential upside really is when we're looking at this chart here, right? The Pudgy Penguins market cap chart. It's very, very unlikely that we're going to see 10 billion or a 5x or 15 cents for Pengu anytime soon. If history is any indication, it's more likely that we are going down from here. Many meme coins have reached the $2 billion mark and then came crushing down in the few hundreds of millions. Is the same going to happen for Pudgy Penguins? I don't have a crystal ball either. I'm simply just pointing out what happened with many similar assets in the past. Now, one could make an argument that maybe comparing only the meme coins on the Solana chain is not fair. Because there are meme coins in crypto that are much larger. There is Pepe with 2 billion, there's Shiba Inu with 7 billion, and there's Dogecoin with 33 billion. Now, Dogecoin is its own blockchain, so let's forget about that. But let's compare Shiba Inu and Pepe. Those are, of course, larger than Pudgy Penguins. But is it likely that Pengu will beat Pepe or Shiba Inu anytime soon? I'm not so sure. The total value locked on the Ethereum chain is 94 billion. The total value locked on the Solana chain is only 11 billion. So it only makes sense that the largest meme coin on Solana is smaller in market cap than the largest meme coins on Ethereum, Shiba Inu and Pepe. The price discovery dynamics have very much changed for Pudgy Penguins. In the very early days, there was a lot of trading on-chain. People were buying Pengu tokens directly on the Solana chain. But over time, the supply more and more moved to the market makers and to the centralized exchanges. Even though Pengu is the largest meme coin on the Solana chain, it's only at place number 26 in terms of liquidity among the trending tokens on Solana. There's only 500,000 worth of Pengu on the chain, even though we see 500,000 holders as well. But have a look at the number of first-time traders per day on the chain and the number of token transactions per day on the Solana chain. Both of those charts show the last month, and both of those charts don't show a great momentum, right? This tends to go down. There's really no long-term acquisition happening anymore on the Solana chain. On the left side, we see the number of retail investors. On the right side, we see the number of whales. The way we make this distinction is by looking at how many tokens are held in a particular wallet. To be counted for the chart on the left, a wallet has to hold at least 30,000 Pengu tokens. So at the current price, that's a bit under $1,000. In the middle, we go at 10x from that. So that's now $10,000 worth of the token. On the right, another 10x. So that's now $100,000 worth of the token. We can see how all wallet cohorts tend to rather get rid of their Pudgy Penguin, or at least the number of the holders is going down. The market dynamics for Pudgy Penguins have completely changed. What used to be a spot market play is now 100% a perpetual futures player versus player game. It's all about leverage. It's all about short-term liquidity. Because whoever wants to invest in an asset long-term does not necessarily use the perpetual futures. That's only used for short-term trading. And there are times when most people bet on falling prices of Pudgy Penguins. That's when the funding rate is negative, when the shorts have to pay the longs in order to get negative price exposure. Currently also, most people are actually betting on falling prices. And there is a good reason for that. Have a look at the open interest, so the amounts of bets on the price. There is quite a bit of correlation between how much bets there currently are on Pengu and the spot price. When there's more bets, the spot price tends to go up. When there's less bets, the spot price tends to go down. And currently, the open interest tends to rather go down. And with that, the spot price follows. The trading volume also shrinks. And again, there is correlation between trading volume and the spot price. Especially the perpetual futures traders that bet on rising prices are currently getting liquidated. The shorts tend to make money, of course. The story of Pudgy Penguins very much reminds me of what happened with Bonk. Bonk was also launched on the Solana chain. It was a coordinated effort by the centralized exchanges, and it did have an inflating token supply. So more and more tokens get allocated to the market makers, to the team, etc. Initially, there was all this marketing and a lot of retail investors went into the token. The price did go up, but then after a while we saw the crash, especially as the allocation towards the insider started to occur. Here, have a look at the tokenomics of Pudgy Penguins. Currently, the number of tokens isn't really changing, but we don't really know what happens over the counter, right? There might be some hidden deals where people buy the token and then secretly short it on the perpetual futures market. And then, of course, the arbitrage bots push down the price. But yeah, in general, we do have an expanding token supply. And this is very similar to what we have seen with Bonk. With Bonk, we saw the unlocks from the very beginning. And so that happens with Bonk. Over the long term, Bonk underperformed Solana. But especially whenever there was a marketing campaign, when the price got pushed up again, that was a great time to short. And I entered a short over here, and I just closed this recently. And here is the proof. I opened the short on July 18th, when the Bonk price was still high and started to deflate. I then took some profit on August 6th, and now recently I closed my position. That's why I'm now making this public. This is of course part of the premium membership where I show all of my trades. But I simply just want to show in this video that it's not necessarily always about finding the hidden gem, finding the one altcoin that can still make a 5 or a 10x. A 10x of Pudgy Penguins is extremely unlikely given the market cap. Sometimes betting on falling prices is just equally as good. Here, have a look at the profit we made with Bonk in the community pool, right? There is a capital pool where I trade on behalf of the premium members. Unfortunately, the deposits to that pool have already been closed until end of the year. But the short in Pudgy Penguins made us $92,000. Minus, of course, a few fees of $360. But you get the gist, right? It's not necessarily about finding the one altcoin that does better than the rest. If we see how the market reacts, how the momentum is developing, then betting on falling prices of an inflated altcoin can make a ton of return as well. We just have to look at the long-term development, at the tokenomics, at how the insiders are cashing out, and compare historical market caps. It's really not rocket science. Now let's talk about something a bit more fundamental here. Most people try to chase the pump, right? They try to find the next 5 or 10x meme coin, maybe 100x, maybe 1000x. And the reason why there are so many videos on YouTube about the next 100 or 1000x meme coin is because it sells very well. Most people just want to turn $100 into $10,000 or $1,000 into $100,000. Most people don't want to risk much and then get the very high asymmetric return. The problem with that thinking is that it's not very far away from just gambling, from just buying lottery tickets, swinging the fences, hoping for the home run. But let's say you do make the return with a lucky bet. How likely are you actually going to keep those wins? There are a lot of news articles where lottery winners spend all of their money and then get bankrupt. There's even aggregate articles here. The top 7 Florida lottery winners lost everything. And so really, the vast majority of people fails at finding the next SPX token or the next virtual token. Most people just burn their money, similar to buying lottery tickets. 1/3 of all lottery winners lose their money within 3 to 5 years. You might remember this guy, right? The Dogecoin millionaire. He even went on podcasts, for example here, with Graham Stephan, who's very conservative with investing. And yeah, the Dogecoin millionaire did not sell the top. Now I try to be different on this channel. I don't sell the next 100x meme coin. I think it's much better to try to find ways to compound the current wealth quickly but steadily. Really, once you get serious about investing, you don't need 100x or 1000x. It's not needed. Instead, what's better is to use systematic approaches that historically worked very, very well. For example, this here, right? I talked about this in the past on this channel. This is a backtest that I made for the best moving average for Bitcoin. If you bought and held Bitcoin, you would have gotten this white line over here. But if you timed the market using the 120-day simple moving average, you would have gotten 100% compounded every year. You're doubling your money every year, and this is absolutely massive over time. There's no need to gamble. We can simply just compound our money. Now this is just a backtest, but here is my own data. So if I just dollar cost average into Bitcoin, I would have gotten this line in gray. But because I timed the market with moving averages and with relative valuation bets, I got this line here in black. And I'm not just doing backtests or simulations of trading. I'm also not just showing my own data. I also started now trading for the community here. So the start was on the 10th of July, and so far we've got an annualized return of 79%. Very similar to what I got and what the backtest suggests as well. Fundamentally, being able to constantly compound capital over the long term is much more useful than trying to find the next lucky home run. You don't want to gamble. You don't want to end up buying scratch tickets. Instead, even though it's not sexy, it's really better to focus on the long term. It's really better to try to figure out where is there actually mispricing in the market. Where can we get constant alpha? Where can we actually invest larger amounts? Because that's the problem with those meme coin bets, right? We already get into this with the anticipation that there's a good chance that this goes to zero. Thus, we can't invest a lot of capital in this. We already have to psychologically diversify. We just bet a little bit of money hoping for this to do 100x. We can't really seriously invest. But once we reduce our volatility, once we use trading approaches that tend to appreciate relatively constantly, suddenly we can deploy much more capital as well. Because besides just the return here, right, the 79% APR, what I'm actually most proud of is the maximum drawdown of only 2.3%. It's about being able to have the best risk-adjusted return. The question should not be what's the next 100x meme coin. The question really should be, is there a way to become a better investor long term? And so I made actually a poll among the premium members of this channel. So that's over here. Has premium helped you improve as an investor, and 86% said yes. This is another number I'm very proud of. I'm quite sure that for most other memberships, this number would be much, much lower. Fundamentally, I think that any investing is a game of both luck, but also of skill. We have to maximize our expected return. We do not know what's going to happen in the future, but we can try to figure out what are the probabilities, what's really our risk versus return. And I've created a lot of content around this. How can we manage our risk? How can we maximize our return? How can we properly diversify? How can we find the right opportunities within crypto while not risking everything? In case you're familiar, it's a little bit like poker, as in we do not know what the next card will be, but in general, we should bet more money when we've got a high chance of winning. We might not win with double aces, but the chance of winning is comparatively high. We should, in most cases, bet a lot of money. And so feel free to check it out. It's currently $125 per month. If you do not like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're willing to spend some time, if you're willing to watch some videos, learn about investing, I'm quite sure that the likelihood is very high that you're becoming a better investor as a result of joining premium. Now, a link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.